literally, it's going to be a golden age for gold. And so far, gold is shining bright in the Trump presidency. But what's shining even brighter are the gold and silver mining stocks. So while everybody wanted to buy fool's gold and Bitcoin-related stocks, had they just bought gold stocks instead, they'd have made a lot more money.
Why you're seeing de-dollarization. Holding your assets in dollars is the surest way to go broke in an inflationary environment. The dollar's already down 11% so far this year. And this is a trend that I think will continue not only just through de-dollarization, but also through the plans of this administration to have a weaker dollar with the intention of having it spur on manufacturing demand in this country.
It's going to explode. I agree. Forget 3 times. I don't know how many times it's going to explode, because you've also got governments with their deficits, which will be ballooning because tax takes will go down, welfare payments go up. I mean, the whole thing is a catastrophe, which can only result in the collapse of the currencies.
In today's news recap, UBS, stay long silver, buy below this level. UBS urged investors to maintain long positions in silver and pointed to favorable entry levels after the metal's recent consolidation. Silver prices have recently consolidated around $38 per ounce, but UBS expects the metal to advance toward $42 to $44 in the coming quarters, provided the Federal Reserve resumes its rate-cutting cycle. The bank introduced its third quarter 2026 target with this note, rolling over forecasts and making incremental upward adjustments further out. Its projections for the fourth quarter of 2025 and the first quarter of 2026 remain at $42, while forecasts for the second and third quarters of 2026 have been raised to $44. We favor a long position in silver and would add to positions on pullbacks below $36 per ounce, strategists Dominic Schneider and Wayne Gordon wrote. The team notes that drivers behind the bullish case are unchanged. Expectations of the Fed gradually shifting rates to neutral, a softer U.S. dollar in the mid to high single-digit range, and eventually stronger economic growth supporting industrial demand should underpin the market. However, the strategists caution that near-term growth concerns may limit upside, given that more than half of silver demand comes from industrial applications. Historically, the gold-silver ratio at 89.7x could narrow to 75 to 80x if growth accelerates, UBS said. With its gold forecast at $3,700, this would imply silver prices in the $45 to $50 range, though the bank considers it premature to reflect such levels in official forecasts. Its long-term target of $44 already points in that direction. Now, we'll show you the best clips of the latest interviews, but first, smash the subscribe button and turn on notifications so you do not miss out on our recaps. And check goldsilverstacks.com to get the Stacker's Handbook, the ultimate guide to trading the gold-silver ratio and increase your ounces. With this easy-to-read book, you'll know everything you need to know to stack efficiently so you don't have to rely on market commentators. Enjoy the episode.
It's not like our phones are ringing off the hook. They should be, right? People should be calling in droves. We probably, we still get more people, I think, selling their gold and silver. They think they're getting a good price. They're getting a lousy price. Gold and silver prices are just going to keep going up. Why? Because the dollar is just going to keep going down. Powell just told you that, right? We're going to sacrifice the dollar. We don't care. Right? We're cutting rates, even though inflation is above target. But more importantly, they're going to go to QE, because what is going to happen? They're going to cut rates and long rates are going to go up. Then what? Because they want long rates to go down. That's the main goal. They want to get long-term interest rates down so the government, they think, can refinance the national debt at lower rates. They want to goose the housing market, right? Instead of doing the right thing by letting home prices go down, they want mortgage rates to go down so people can overpay for these homes. But when mortgage rates don't go down, then they're going to still want the Fed to bring them down. And how are they going to do that? quantitative easing, where the Fed goes into the market and buys treasuries, or maybe starts buying the mortgage-backed securities again. They haven't been buying them at all. They've just been buying treasuries. In fact, they've been selling mortgage-backed securities as part of quantitative tightening. So obviously that's going to come to an end. I mean, that may come to an end in September. But there's going to be a lot of pressure on the Fed to resume quantitative easing in order to bring interest rates down. And that is going to bring the dollar way down. And you got to prepare for that. Look what happened to gold prices. Again, gold up. Gold is up 28% this year. It's a nice move, right? The year's not over yet. We're up 28% in the price of gold. Now, Bitcoin got all the headlines in 2025. That's all the financial community could talk about. Bitcoin is barely up. In fact, it's not even up 22% year to date. In fact, it was up 22% when I first started the podcast, but now it's dropped about $1,000. When I started doing this podcast about 40 minutes ago, and I looked at Bitcoin, it was 113,500, and it wasn't up 22% on the year. Now we're down 1,000. So Bitcoin isn't even up 21% now. It's at 112,500. So Bitcoin up 21% on the year. Gold up 28. Right? What I thought Bitcoin was supposed to be the fastest horse in the race, right? That's what who said that? That was Paul Tudor Jones, right? Oh, I'm buying Bitcoin. It's going to be the fastest horse in the race. Well, it's gold's got a nice lead this year on Bitcoin. In fact, I think they're sending Bitcoin back to the stable. In fact, eventually they're sending Bitcoin to the glue factory. But look at the gold and silver mining stocks. The GDX and the GDXJ were up 3 1/3% on the week. And the GDX and the GDXJ closed the week on new multi-year highs. I mean, maybe 12, 13-year highs. Year to date, the GDX is up 77.5%. And the GDXJ is up 78.5%. Those are huge returns. And, we're not even at the halfway mark for the third quarter. And we got those kind of returns. These gold stocks are on pace to more than double as a group in 2025. I said this when Donald Trump proclaimed that America was on the cusp or beginning, whatever, a new golden age. I said he means that.
In today's news recap, Chinese insurers put pressure on the gold market. Chinese insurance companies are about to detonate a bomb that could have a profound impact, especially on the gold market. This bomb was already set off in February 2025 when the Chinese government, through its Insurance Regulatory Authority, issued a new regulation requiring the country's large insurance companies to hold at least 1% of their assets in physical gold. 1% of assets may not sound like too much gold that now needs to be purchased by insurance companies. Initially, not all companies are affected, but only the country's largest insurers. However, this is only the first stage of a multi-stage plan. The next stages envision gradually increasing the number of insurance companies affected by the regulation so that eventually all insurers will be included. The percentage of managed funds that must be invested in physical gold is also expected to rise from 1% to 5% in the medium term. A massive rush from the Far East for the world's gold is slowly but surely brewing. The decision by the Chinese Insurance Regulatory Authority has far-reaching implications, as it will redirect billions of U.S. dollars, which have predominantly been invested in U.S. government bonds, into the gold market. The immediate consequences are already significant, but even more dangerous are the medium-term effects that this decision has or could still have. Since decisions of this magnitude in China are not made on a whim, but are approved by the highest authority, we are dealing here with another facet of China's strategy to detach itself from the U.S. dollar and the Western financial system. Now, smash the subscribe button and turn on notifications so you do not miss out our daily recaps. And go to goldsilverstacks.com to get the Numismatics Handbook, the perfect guide for stackers who want to get active trading gold and silver coins instead of selling their gold and silver bullions for fiat. Enjoy the episode.
I mean, the deliveries on the COMEX are extraordinary, Elijah, as are the offtakes off the COMEX exchange, which are extraordinary. These are very, very much aberrations. They're anomalies. We don't see them very often, or never have until recently. And I remember talking with your dad in 2020 about all of a sudden all of these deliveries coming into COMEX. They've only increased 100-fold. But when you talk about trends, Saudi Arabia is now, to my mind, the third government next to China and Russia who are, well, maybe let's call it the fourth, India, China, Russia, and Saudi Arabia now. And again, these are all, these are members, whether admitted or not. Saudi Arabia is, in essence, in my mind, pretty darn close to a BRICS member in that they are a full participant in the Bridge technology. They are going to all of the BRICS meetings. They are very much have one foot in and one foot out to appease the West, but by all of their moves appear that they are going lockstep with the BRICS movement. They took a major stake in SLV, the silver ETF recently, and enough to demand physical delivery. Now, they haven't done it yet, but you have to have a certain amount, like it's a basket, huge amount, millions and millions and millions of dollars worth, in order to be able to demand physical delivery. This is a privilege retail investors do not have. They will. I find it interesting. We've talked at length about China flying around the world and buying doré and concentrate directly from the miners in South America and Mexico. We've talked about India buying over 800 million ounces in the last 5 years. We've talked about Russia making it part of their national stockpile, which we'd never heard before from a government. And now Saudi Arabia is doing just that. And so when you realize that India, China, Saudi Arabia appear to be publicly accumulating silver under the guise of industrial uses, it's a lot more than industrial. Silver is really more strategic than it is industrial. You mentioned billionaires. David Bateman is the one that comes to mind. He came out recently and said, that just a 10% shift from gold to silver, where all the people investing in gold, if 10% moved it to silver, it would consume all newly mined silver globally. This is, implying a potential massive squeeze. He said, one billionaire won't do it, but 10 would. Or a 10% shift out of gold into silver. When you see governments like Saudi Arabia come into the fray, you know that it's coming. I found it very interesting. One of the things that I talk about a lot when we talk about the public not holding any gold, very little. My standard phrase I copy from Rick Rule. He says, from Joe and Jane Sixpack to the Harvard Endowment Fund, the average of gold owned by the public and gold-related equities is 0.5%. Well, lo and behold, the Harvard Endowment Fund just bought $101.5 million in GLD recently. And so now you have all of these institutions jumping into accumulating precious metals. Now, these institutions, I don't know how much they understand the difference between GLD and the real thing, but you look at Bass, his last name is Bass, I forgot, Kyle Bass, I think is his name. When he was running the hedge fund, I think it was for the Texas the Texas Teachers Union, or it was a big fund for that. I believe that's what it was. It was a long time ago, maybe a decade ago, but he put all that money, like $1 billion into GLD, and they took possession of it as well. So I don't know if he intends to do this, or they intend to do this time, the Harvard Endowment Fund, but the very fact that they're buying $101.5 million in GLD tells you that gold and silver are becoming more mainstream, certainly more mainstream. And I think you'll see at this upper level on COMEX, sovereign wealth funds, endowments, that's one step away from the public, who is still kind of blissfully, whistling Dixie, not really understanding the significance of this. But the people who are very, very tied in to what's happening globally are making moves and standing for delivery. It's a big deal. To see the Harvard Endowment Fund jump into this degree is a very big deal.
And now Alasdair Macleod shares his view on the current macroeconomic situation affecting gold and silver prices.
The answer, actually, there's only one answer. and that is the legal one. The legal one in everybody's common law. And that is that you have to tie the value of credit to what is called corporeal money. In other words, money which actually exists with no counterparty risk, and that's only gold. So we have to get back onto gold standards, in effect, working gold standards, so that the value of credit, because gold doesn't circulate. I mean, you don't end up paying things except as the last resort do you actually part with gold. It's always credit. Credit has to be tied to gold, and that's where we've got to get back to. They'll go down, they won't get there immediately. I mean, we won't. I think there's a very strong possibility that China is planning to go in that direction. But this is a defensive move as far as China is concerned, because she won't want her currency, which will be central to the new world, if you like, the new world away from us. She doesn't want her currency to collapse with the dollar or anything. I mean, she's quite happy to run a fiat currency system while the world is in a fiat currency system. But, when the dollar really does tank, I mean, she's going to protect herself. And, it's a sensible policy, because if she was to do it now, she would be accused of collapsing our system. She doesn't want that. So, it's sort of collapse is underway first, then China protects herself with the gold standard. And Russia, incidentally, Russia can do it tomorrow. Russia, I think, probably wanted to do it yesterday, but, the Chinese have persuaded them to stay the hand. So that's what's going to happen. The rest of the world is going to go onto a gold standard via the yuan in particular, and any other currency goes. And I mean, China's already planning to do this. She's opening Shanghai Gold Exchange vaults in Hong Kong and Saudi Arabia. Why Saudi Arabia? Because of oil. It's an oil to yuan to gold exchange standard in the making. Hong Kong is the financial center, if you like, the offshore financial center for China's capital activities. So, yeah, I mean, you got those. I think she'll probably open vaults elsewhere. I mean, you may recall that when on April the 2nd, or just after April the 2nd, when Trump had his, all these boards with all these rates that he was getting, tariff rates that he was proposing, President Xi the following week went round all the, well, not all of them, but most of the ASEAN nations in the district, talking to, to Thailand, to Vietnam, to Cambodia, to, Malaysia and Indonesia, I guess, as well. And now we don't know what he was saying, but I think quite simply, he was saying, look, we've got to band together on this. Now, of course, you band together on trade, ASEAN being a free trade area. They will bring in particularly Japan and Korea, South Korea. You can talk trade, but then you've got to talk about a settlement currency. And it's plainly not good enough, for example, to accept Indonesian currency, which, is going down and down and down and down. Why would you want to take settlement in that? You don't. So this is, it's clear to me which way this is going. And, we're sitting here with all our wonderful Keynesian ideas and gold as a pet rock and, in denial and all the rest of it. And how long are we going to take to turn that ship round? The ship of understanding. That's exactly what we've got to do. Because apart from that, you can't just go onto a gold standard. You've got to also change the government's outlook and its responsibilities and its relationship with the economy.
What do you think of Schiff's take? Do you agree with him? Are you buying more gold and silver at these prices? Or on the contrary, are you selling like most other retails? Post your honest opinion in the comments section down below and share your gold and silver price predictions with the Stacker community. Now check out this next video right here because it's the perfect follow-up for you. I'll see you on the other side.